what is a stock? This is one of the most common questions I get when I'm first talking to people about investing. So who am I? My name is Forrest. I invest in stuff. You should too. Mind, body, and your financial future. Understanding what a stock is obviously imperative to investing. When we talk about investing, we're talking about buying Walmart, buying Exxon, buying, whatever company it is that makes your favorite new thing that you just buy. It could be a car, it could be, some consumable item, the eggs that you buy, clothes on your back, whatever it is. A stock gives you a piece of ownership of that thing. So speaking of stocks, if you want stock in this channel, go ahead, hit the like button, hit the subscribe button, and let's get into it. But in all seriousness, a stock is a piece of a company. And the question that a lot of people ask after that is like, okay, why do stocks exist in the first place? Why do companies even issue stock? If I was going to start a company tomorrow, what would be the reasons that I issue stock? You don't necessarily have to do this. Like, I can create a company, call it a partnership, where I own 50%, somebody else owns 50%, and we just split the money 50-50, zero stock involved. So the number one and really the only reason that stock exists in the first place is to raise money, right? And let's dig into that. So there's two ways you can raise money via stock. So one, I want to say I create a startup, I want to hire a bunch of people, I'll give them some stock as part of their pay, right? So they'll have some salary, I'll issue them some equity percentage. It could be 0.0125%, whatever it is, ownership in the company. As soon as we go public or we get acquired, which are the two ways to realize the gains on that stock, everybody would make a ton of money. So as an employee, maybe you get some stock at $1 a share. The company goes public at $30 a share, and you just made $29 per share. Maybe you had 10,000 shares. Do the math, you made a good chunk of money. Everybody who owns stock in the company does the same thing. So when you think about an IPO, that's what the company is doing. They're doing an initial public offering to raise money or to pay themselves, right? When you think about why companies are actually doing this, it's they want to fund some new development, grow the company, or for the people who have been working there 5 to 10 years, that's their payday, right? They've owned stock at $1 to $2, some super low cost basis, and they need an exit. And an IPO is the exit. So if you're buying into a company that's freshly on the market, just realize that you're paying people who have been there for a long time. The same goes for you too. So when you buy a stock, understand that you're trying to get in at some low basis and you're trying to exit at a higher basis, right? So when we think of investing in companies, you become a part owner of that company, ideally with the goal of exiting at a higher price than you got in at. So what are some of the stocks that you should buy? Again, buy things that you know and understand. You are becoming a part owner in the company, and I think that is the message that I really want to impart on you when you actually are investing in companies. Keeping in mind the idea that you get to go to quarterly meetings where you can actually listen to the people who are running the company, ask them questions, right? Because you are an investor in that company, you're an owner of that company. By no means should you forego or minimize the fact that by owning shares in Walmart, for example, if you invest in Walmart, don't just think that you basically have something that has some price that might change in price over time. While that is true, right, that is why we buy stocks, but you actually are one of the many millions of owners in Walmart, and they basically have to answer to you. So as investors, all companies are looking to their shareholders, that is the people who own stocks, and are trying to make them money. Very often in the news, when you hear some CEO talking about what they're going to do and for the company and really who they're beholden to, they'll often mention their shareholders, right? Those are the people who own the stock, because the shareholders are literally the people who own the company, right? So those people, shareholders, in all cases come before customers. When you think about who a company serves, it's the shareholders, and the shareholders often make money by serving customers. But first and foremost, the CEO's number one concern, keeping the shareholders happy, because the shareholders being happy is what keeps the price up. It's what drives the price higher, right? By bringing in more and more shareholders, you increase demand. Increase demand with a limited supply of stock causes the stock price to go up, which is how people can make more and more money. So there's one more type of stock that I want to talk to you about, and that is actually a bundle of stocks called an ETF, which stands for Exchange Traded Fund. So very often when we're talking about investing, retirement funds, you hear that word funds, right? What is a fund? A fund is really just a bucket of a bunch of stocks. So let's say you only have $100 and you want to invest in Walmart, you want to invest in Boeing, and you want to invest in, I don't know, Toyota, right? And the stock price of Walmart, let's say it's $100. The stock price of Toyota, let's say is $100. And the stock price of Boeing is $100. You can't invest in all three, right? You can only get one of those. Well, what if there was a way, some company who bought all three of those and then created their own stock and let you invest in that? That's exactly what an ETF is. An ETF basically lets you get access to the underlying price movement of all of these bundles of stocks via one stock. And so you can invest in or buy in an exchange traded fund, which gives you access to the price movements in all these underlying funds. Now, one of the key differences between investing directly in a stock versus an exchange traded fund is that the fund manages what is in that bucket of things. You're not managing that yourself. So you basically need to find a fund and a fund manager who fits your investment preferences and style. It's an airplane. We're like 10 minutes from the airport, so this happens all the time. But an ETF is probably the best way to get started. By no means, unless you want to be a professional investor, should you spend time every day, every week, or even monthly trying to pick and choose which stocks to buy, getting in and out of things. Timing the market is impossible. 99.99% of people are actually terrible at buying and exiting at the right time. They're actually so bad at it that you're pretty much guaranteed to lose money unless you spend the time required to actually learn about price movements and become a trader in some sense. I do a bit of trading myself, but we're not going to dig too much into that. The most important thing to remember is that an ETF is a bundle of stocks. It's a great way to get access to a bunch of companies at once. You can actually diversify your risk, and more so, it's really just the easiest way to start investing. So when you're looking at stocks, remembering you're becoming a part owner in the company, an ETF is one of the best ways to get access to many companies and a great way to get started. But that's basically it for this video. Just kind of want to give a one-on-one entry level on some of the terms and fundamentals related to saving for retirement, investing in general. Common questions I get literally all the time. You would think that these are concepts that we would just learn in school, but a lot of people aren't afforded the opportunity to understand these things. They really are simple concepts, just ownership in a company and a bucket of these things. That's what a stock is, that's what an ETF is. Hope that was helpful. If it was, go ahead, leave your thoughts down in the comments below, and see you in the next one.